Hello everyone, this is Joni, and today I'm recording this video to teach you about how to interpret or how to um, manage your trades based on major news such as the federal funds rate or the RBA cash rate or the counterpart in Europe, which is the ECB main financing rate. So these rates are considered major news releases simply because they deal with the interest rates or interest rate cuts or how each central bank in the world would manage their interest rates. Now, the main site that I use, in fact, one of my favorite sites to use in terms of calendar news would be forexfactory.com. It also has reference on the different interest rates, the current interest rates for each central bank. And of course, this is very important. So what I'd like to teach you today would be the rate cut scenarios. And these rate cut scenarios would either be a hawkish cut or a dovish cut or a hold. So we'll be discussing all these, and I hope you'll learn a lot from this. Okay, but first things first, I'd like you to pay attention to this part of Forex Factory website where the central bank rates are actually right here. Okay, so you'll see pound, the central bank in the UK current rate is 4%, US dollar is 4%. Of course, as of the time of recording, it's December 9th. I think tomorrow morning my time, they'll be expected to cut rates to about 3.75. Australian Central Bank, RBA, is at 3.6. Canada 2.25, New Zealand 2.25, Euro 2.15, uh, Japanese Central Bank at 0.5, and Swiss Central Bank at 0. Okay, so let's talk about, for example, if the Fed, the US Central Bank, is expected to cut rates tomorrow morning, and this will bring it down to about 3.75. What will be the market reaction? Now, these market reactions will have, of course, differences, but mind you that the direction will always be leading towards strengthening to the currency with higher yield or higher interest rate. So going back to this, you'll see that if the Fed would cut rates to 3.75, naturally it would have less yield than the UK central bank. Depending on the tone of the cut, there may be um, a slight deviation from the original direction it's supposed to go. But eventually, since the UK central bank has a higher yield, pound would, of course, be stronger than the US dollar. Okay. In the same way, if the US cuts rate to 3.75 and the RBA or the Reserve Bank of Australia holds rate at 3.6. Okay. There may be some deviation from the direction, maybe a dip there or a rally there, but the US dollar remains to have a higher yield. So medium term, it would still be stronger than the Australian dollar. Okay, so let me explain that. Here we have the calendar for the week. Today, December 9th, the RBA is scheduled to cut or hold rates 3.6. So that's the Australian dollar cash rate. So this would, of course, give the Australian dollar some strength. Okay. But since the market has already priced in this strength, so maybe there wouldn't be that much of an effect. Okay. The real movement will happen when it comes to the 11th of December, when the federal fund rates or the Fed would cut rates from 4% to 3.75. So let's talk about what are the variations or the nuances of these rate cut scenarios, okay? Rate cut scenario. So pay attention to this one, okay? So we already know that the federal funds rate may be cut on December 11th, maybe 3.75 or maybe it's hold, okay? We don't know what would happen. But in case there is a cut, there could be two variations of this. It could be a hawkish cut or a dovish cut. Okay, let's start first with the first one. If it's a hawkish cut means the Fed lowers the rates but signals caution, meaning there's inflation risk, lower pace of easing, fewer future cuts. Okay, so what are the near-term effects of this one? So the near-term effects would be US dollar strength. Of course, there will be a hawkish tone and it would surprise the market. So what would happen to pairs like AUD, USD, or Euro dollar? They would push lower, okay? Because USD still has the yield advantage plus a hawkish stance, okay? The stock indices also, like the global stocks like US 100, US 500, Germany 40, in tight financial conditions, they are, of course, risk assets. So they dislike hawkish tone, so they'll push lower. However, what's the medium to long-term effect? Now, remember, Fed, when they cut, it means they're easing. Now, eventually, even if it costs the US dollar to strengthen, eventually, medium to long term, the US dollar will still weaken because as more cuts accumulate, right? So the AUD, USD, Euro dollar will recover. They'll find support and they'll push higher relative to strength versus US dollar. Now, the stock indices will, of course, rebound since the lower rates of the Fed will support equities once the hawkish shock fades. So the hawkish tone is basically a shock. So it would give the US dollar temporary weakness, but then a cut is a cut. They cut rates, so it's still easing, and the US dollar will still keep on getting weaker. Okay. Now, what if it's a dovish cut? Dovish cut means the Fed lowers rates and signals more easing, more cuts. So they want to focus on growth and less concern about inflation. So what's the near-term effect? Since it's a dovish cut and they have signaled more cuts or more easing, then the US dollar will weaken immediately, right away. The markets price in aggressive easing, right? So AUD, USD, and Euro dollar will push higher because the USD will lose the yield advantage. The stock indices will rally since there are lower rates, and the dovish tone support the risk asset, meaning dovish tone, it's risk on. Okay, so investors are willing to take more risk. The medium to long-term effects, there will be continued easing and it keeps the US dollar under pressure. So AUD USD, Euro dollar will trend higher, especially if the RBA or the ECB holds steady. And the stock indices would sustain upward momentum as well. Okay, so that's what it is. Now, that's how you would interpret a Fed rate cut, either a hawkish or a dovish stance. A cut is a cut. There will be easing. Okay, if it's a hold or if it's in an increase, then definitely it would have an opposite effect. So if there's an increase in rates, then definitely the US dollar gets stronger. Okay, the tone is the one that drives the movement. The hawkish tone gives the US dollar temporary strength, okay, during a rate cut. The cut with the dovish tone gives the US dollar immediate weakness. Okay, so I hope that this videos help you, and you can use this information to um, help you think about what trade direction you would like to take. Now, remember that the market is random at best, and there can be no guarantees of the movement, and you should always remain alert with the price movements. But what I've shared with you would be general information, and could be useful when you're making your trade decisions. Thank you very much for listening.